So my name is John Seacrest. I run the Seattle Angel Conference. My goal is to make the rate at which we get investable companies funded go faster. We've spread this from San Diego to Alaska, and now hopefully we'll go east and get other people doing it as well. And our goal is to get people who are accredited to write checks, the ones that are not writing checks to write new checks. And to do that, we need companies to be investable. And one of the first things that investors look at is their finances. And so we say, I would like a cash flow, assuming that people mean a cash flow projection for 5 years about where you plan to take the business. And they go and do a backward looking cash flow analysis of their past sales and hand that to us. And it's exactly not what we needed, right? And then so there's a bunch of financial instruments that end up being useful from an investor point of view that we would like you to have the financial discipline in place for you to do that well, so that when we come asking for specific numbers, they're easy to generate. And so Andrew from Z Accounting has been engaging with the Angel Conference for a long time now, and we're working on trying to get companies to be a little bit stronger that way. So Andrew, if you could introduce yourself and then dive into the talk.
Yeah, so I'm the founder of Z Accounting. I previously worked for an angel investment firm that was acquired by Kpis, and I just realized there's a huge problem, the one that John is kind of identifying, that entrepreneurs and investors had a hard time communicating the potential of the business and communicating the potential of the returns. And I felt like accounting and finance was a great way for the entrepreneurs to understand their business better and for the investors to be able to ask the right questions that matter for those businesses. And also, no one listens to you if you're just providing like advice or strategy. If you're giving them the numbers, then they can't afford to not listen to you. And so I like it when people listen to me. I've created this deck. Oh, and I'll throw in two more things. So one, we've got about 180 clients that work with Z Accounting. A lot of them are early stage startups. And so we're like on the highest level of QuickBooks partners. So we get QuickBooks for half off. So if you don't already have QuickBooks, reach out to me. I'm happy to pass on my savings to you guys. Also, I will meet with any entrepreneur through the Angel Conference promotion. And I guess, John, I'd probably extend it to anyone on this call as well. I'll meet with you for an hour to sort of take a look at what you've currently done and say, hey, what's the next steps? Or it was sort of intended for if you went through Angel Conference and you won or didn't win, what can you do next to make the next milestone to get that much more traction? And so I've always met with any entrepreneur for free for an hour, and I will continue to meet with any entrepreneur for free for an hour. Scheduling hours is a little harder now than it was when I first started my business, but you can actually book me directly on my website through Calendly. So I'd be happy to meet with anyone that has questions. And a lot of people mentioned things on the call that I thought were kind of interesting. On the Dan, so you had a construction startup. I went through Techstars with a construction software startup for building plans. And then Stanton, one of my clients is actually a aftermarket auto parts accessory company that does a backup sensor and camera. And I could say probably something about everyone's business because we have, I've had a lot of experience. So it'd be fun to just talk to people afterwards.
Yeah,
so
absolutely. I'd be interested in.
Awesome. Yeah, and then my website, zaccounting.com. It's like accounting, but with an Z instead of an A. And, funny story, I wanted to be accounting.com, but clearly that was already taken. Went through the whole alphabet and Z was available. So this presentation is really a basic presentation of saying, hey, if you've started your business, what should you be doing to get your accounting sort of set up? What do you need to think about as a startup to just get accounting started and ready? And what are the things that should be on the top of your mind as you're approaching investors, you're approaching that first milestone and getting that traction? And so some of this might be slightly rudimentary for some people. Like if you've already got QuickBooks and Gusto and you're running millions of dollars a year through your business, some of this stuff may be kind of basic and you may already be doing it. So we'll use the extra time for direct questions. And then some people, it might be like, wow, geez, I didn't realize I need to do that. So I'll dive right into it, John, if that's okay. Perfect. So me, I'm the founder. I talked a little bit about my background. These are my two beautiful kids and beautiful wife. And so what I wanted to think about for the three things you need to do for accounting is I think that you should think about it as the past, the present, and the future. And so when we're talking about the past, we're talking about to date, what have we done? Where are we at? And we'll talk about ways that we can accomplish that. The present is exactly the question about your daily projections that a couple of people I think mentioned. How much cash do we have? Can we make sure that we can meet our obligations today, tomorrow, and next week? And how do we track that stuff? And then the future, I think that not having a goal, I heard a story that Google always makes their employees set 10x goals. And if an employee doesn't hit 10x, they're not penalized or punitive, but if you're shooting for a 10x goal and you hit 5x, that's still pretty freaking awesome, right? But if you're shooting for a 10% improvement every year and you don't hit that 10% improvement, it's pretty abysmal. And so I think that thinking about the future, how do we measure success? How do we hit the metrics? How do we track the metrics that we can show that we're going to be successful? So in terms of the past, I think it's very important when you're starting a company to have a solid corporate formation. My dad gave me some great advice when I was starting my first business, that it's better to start with the lawyers than to end with the lawyers because it's cheaper. And so when you're thinking about being faced with a big $5,000 corporate formation legal bill, I think it's better to start that partnership before things go bad, or hopefully things will never go bad if you have a good partnership. So when we're meeting a new client who's setting up for the first time, we suggest file your corporate entity, get your EIN, open a business bank account. And if you can keep all of your transactions in the business bank account, I understand that some people that's not feasible since they don't have outside funding and they're self-funding maybe with credit cards or other things. But to the extent that you can make the business look as much like a real business as you're just getting off the ground, makes it easier to track it and hand it off to an accountant sometime in the future. And then the other thing, I've done a couple blog posts and some Instagram stuff around business credit cards. I really like the American Express business credit cards because you have to pay them off at the end of every month. You won't incur a balance over time, and if you do, they stop you from spending. And I think that the Amex cards are a great way to protect the assets that you have in your business while also not exposing yourself to a giant credit card liability. I've met a lot of founders. I actually helped a founder work out about $150,000 in credit card debt because he just kept putting things on the credit card but had no revenue coming in and no ability to pay it. And he was in, he had tax liabilities, had credit card liabilities. And when we had to unwind that to get his funding from Techstars, it was a big, big challenge, and it was very expensive for him. And then also, I suggest QuickBooks to track all of your expenses. I suggest connecting your bank account to QuickBooks. The reason that I like QuickBooks is because it's the largest, most popular accounting software for small business. I wouldn't necessarily say that QuickBooks is like some super great software, but it is the most well-known. And if you're not using QuickBooks, oftentimes when you hand off your accounting to a tax preparer or to another accountant, there's going to be a learning curve to learn the new software, or there's going to be pushback. We attempted for a time to roll any accounting software, like Wave Accounting, which is a free accounting software, Zoho, which is accounting with some other things tied into it, or Xero. But every time that we had to hand it off to a tax preparer or another partner for evaluation, they're saying, well, can't you just export the report from QuickBooks? We're used to that one. And so that's why I suggest QuickBooks. And like I said, we get QuickBooks for like 20 bucks a month. So then when thinking about the present, I think about cash flow management. And so on a very rudimentary level, I think if you list your monthly bills and expenses in order of priority, and priority means, if you don't pay it, it'll get shut off, probably, or the squeakiest whistle. I think that that's the easiest way to think about budgeting and cash flow management. Just create a list of all of your expenses that you know. But also, don't forget about taxes. I think I mentioned in the story before, the guy who had ignored his credit cards and taken big expenses to fund the launch of his business. He had a huge problem because he had paid payroll, but not withheld the correct payroll tax liabilities and not submitted his payroll forms to the IRS. And taxes are one of the things that can pierce the corporate veil. So if you're not paying sales tax or payroll tax to the federal government, you personally are liable. And so your LLC or C corporation doesn't protect you from the government seeking those funds. And the other thing for sole proprietors, we suggest that sole proprietors create a tax savings account and put money aside for taxes first. So if you get $1,000, put $300 away in a tax savings account so that at the end of the year, you're not faced with a huge tax bill and you're having to make negotiations with the IRS for payment plans and such. And again, I think I wrote it about 4 times, don't mess with taxes. If you owe taxes, pay your taxes. All right, and then future, you hear a lot of talk about KPIs, and I have another slide with all of the different KPIs that I think are important. But I think that you should think about what are the milestones that we need to achieve to know that we're successful in the next month, quarter, year, or 5 years. And it's important to know what those things are because the investors are going to be looking for them. And so I'm not going to go into how to build a financial model here, but I'm going to suggest that, maybe look at some of our old content that John has done, some of the old presentations that I've done. I don't know if you recorded them or not, but looks like you're recording this one. So go to some of the old presentations about financial modeling, or just reach out to me. I'm happy to answer questions. But create a plan of where you're planning to go, because if you're not planning to go anywhere, it's really easy to get lost. So here's some common KPIs. So everyone can read this list. I don't need to read them out. I know people love hearing my calming, loving voice, but I think people like to read as well quickly to get through it. If there's anything in specific, if someone wants to jump in and ask a quick question about any of these, go for it. And I'll actually
Well, let's back up a little bit. Let's go and ask some people some questions. So, how many people, raise your hands in the platform if you have a notion of what your cost of customer acquisition is? If you can tell me, if I spend X number of dollars, I will get 1 customer. How many people can do that?
I think our CAC is like a little bit less than $5.
Yeah, I suspect that's not true, Alex. I wonder, what is your sign-up mechanism by which you know you have a customer that paid you?
So our KPI for that is app downloads. So a user of the app.
And are you, that would not be a customer, just to be clear, a customer pays you. So what's the cost of acquiring somebody that will pay you? So only Brian raised his hand. So Brian, can you tell us about your cost of customer acquisition?
Yeah, for the customer side, it's kind of a pain in the butt because you got to go to conferences and work with them over months, and so and then every time we try to sign a contract, you got to go get the legal team to review it, so we end up paying like, I don't know, $5K a month to lawyers just for getting the business off the ground and being able to sign contracts with people and stuff like that. So
how much does it cost you to get one?
Probably about 10, 15K.
Right. Okay. And yeah, go ahead, Ben.
I was just going to say, all of my customer acquisition comes from me emailing, basically cold emails, and then the correspondence. I have no idea what my time is worth for this, and I think that would probably be part of the equation, right?
Yeah, absolutely. So pretend that you're going to be an owner and not an operator, and you're going to hire someone. You're going to hire Brian to blather at people via cold emails. And how many hours of cold emailing does he have to do for him to get 1 customer? And how many weeks will it take from his first cold email to a beanie sleeper going out the door?
Yeah. Do you want me to answer that, or you want me to just write that down?
Yeah, no, I want you to
yeah.
give me an
Okay.
answer.
Yeah. So it probably takes me within, say, 2 hours, I can send out 100. Well, not 100, but I can research 100, and it's basically cut and paste into my email. So it's really not that long. From that, it could take 2 to 3 days to get a response. From that, it can take another couple of days till they say that they want a sample. So we're probably at a week. I can send them a sample, which takes another 4 to 5 days. We're looking at about a 3-week process to get one
So,
customer.
but you just said the sales cycle. Now, if you add up all the hours of every time you think about it, and you say, I had to have a person there for 3 weeks. So if they'd spent full time doing just what you said, how many customers would they have at the end of 3 weeks?
I think it would be at least 10 new customers based
So,
on the results I'm getting.
How much is full time for a person doing that kind of work? You're going to pay them $20 an hour, $50
to
an
be
hour?
honest, I'd probably hire somebody off of Upwork where I could pay maybe $10 an hour or less.
So full time, $10 an hour, 3 weeks.
That's
What's that number?
$1,200.
Yeah. Divided by 10 is?
120.
So your cost customer acquisition in this story is essentially 120 per person, right? And this is exactly the place where startups get in trouble, because they do it all themselves for free. And then they think they've got a really great 50% margin, but they don't add the cost of customer acquisition in. And so they're actually spending more money than they get. So they're giving away money if they hired somebody to do it. So they're basically doing it for free, right? So there's where the marketing part of the budget needs to be calculated. So Andrew, what did I do wrong in that analysis?
I was trying to follow Ben on Instagram, so I missed a little bit of your analysis.
Thank you.
So John,
Takes him 3 weeks. I'm sorry, go ahead.
You also had the sample costs and other costs in there also, and shipping costs, all that.
Right. Yeah. So he's got a bunch of costs. He's spending 3 weeks. That 3 weeks produces 10 sales. He hires somebody on Upwork to do that, right? And that cost of getting someone, he's currently doing for free. So it's considered zero. And apparently the scraps that he sends out as samples also are considered zero, as are the mailing costs that he sends out the sample with, right? And so there's a whole bunch of things that need to be accounted for in that process. So how would you calculate a cost of customer acquisition, Andrew?
Yeah, so I would imagine at scale to sell your 101st, what is that cost going to be? And I would back into what the cost would be if you had to hire someone else to do it, and what those costs would be for all elements of that process, including all the samples. If your samples today are free, someday they will be paid for in the future. And so when I'm thinking about customer acquisition, it doesn't really matter today if your first customer takes you 40 hours to close and you're giving away your product for free. I think that what matters is that in the future you'll have a scalable model, and that you're working towards ways to prove that your model is scalable, and that you'll be able to close customers at a cost less than the revenue that they pay you. So that drops down to lifetime value or a payback period on those customers. So I've actually got 34 different KPIs that I've sort of aggregated over time. If anyone wants to screenshot the screen to add it. So a couple other things.
Are we going to share the slides?
Sure, yeah. I think they're in the same folder that I sent you stuff before, but if not, I'll add you to it.
Okay.
So this is an overview of QuickBooks now. I don't know if everyone can see the screen again. This was one of our clients. It's no longer a client and wasn't really even a business. But this is sort of just the main page of QuickBooks. When talking about taxes, some people don't know about all the taxes that they have to pay. And so just remember that there's local taxes all the way up to federal taxes. So know that you have a liability on the federal level with the IRS, with the state, and likely with the city that you're in. And in some cases, within the subway station that you're in, if you're in New York. And then in terms of the financial model, I think I mentioned before that I would throw out some extra points about the financial model and how we sort of think about the financial model. So what we do when we help clients build financial models is we sit down with the client and we ask them what they believe to be true about their business and what they believe will be true in the future. So we aggregate assumptions that the founders have. And these assumptions can go in a variety of ways, and I'll tell a quick story on how to sort of think about assumptions. But you are the expert in your business, and so you're the best person to give us the assumptions. So if you imagine that you're a college student starting a company to, for the first time, put water in bottles with a sealable lid and sell that for $1, and your assumption is that you could sell water for $1 out of the quad, right? What you could do is you could go to the library and research all the reasons why people would want to buy water and drink water and how it helps your health. And you could say, hey, if water is 90% of a person's body and is life-saving, they'll for sure pay for water in this format for $1, right? So that's a totally valid assumption. And you could base all of your financial modeling based on the research that you've done about the importance of water and what people have paid for water in the past via books. I think that John Seacrest would have a different view of how to validate an assumption. John would prefer that you would actually go out to the quad and meet real customers. And perhaps you take a big bucket of water and you dip cups in this bucket of water and you sell each cup for $0.25. And you ask people, would you pay for this if it had a lid and was in plastic and you could carry it around, and what would you pay? So as you're giving away cups of water or selling cups of water for $0.25, you're essentially doing customer validation on getting a response from real customers that are actually sampling or buying your product. And so your assumption would be, we assume that people would pay $1 because we got people to pay us between 25 cents and $3 for a cup of water, and if it had a lid, it'd be much more valuable. And so that's the way you should sort of think about assumptions. If there's a way to validate it in real life, do that. If you can't validate it in real life, find the best source of information that you can. And a lot of times you're a domain expert already, use your best guess. And then we think about first, how does revenue and cash come into the business? Then we think about all the ways that revenue and cash leaves the business, which creates a summary. And then we create that beautiful PowerPoint slide that does the hockey stick. Questions on financial modeling?
Poof, and magically it goes up. Yeah, Ben.
I have a question.
Yeah.
I looked at your website. Does that fall into the $99 package? This kind of stuff?
The financial modeling? No, so our financial modeling is a little bit outside. The $99 packages, we're kind of helping you run your own QuickBooks and helping you sort of be successful. So in some cases, very small companies want to do their own stuff because they can't really afford to pay an accountant to do it, but they still need a little bit of help cheerleading through, like, hey, we just took, this loan. How do we add that to our QuickBooks type of stuff?
Understood. Good. Thank you.
Yeah, I'm working on a promo right now with the partner that will do financial models. So we typically do a financial model for $3,000, but we're trying to find a way to provide them half off because he's a young guy who's trying to quit his job. So he's going to be doing them nights and weekends. So if you guys want a half off financial model, we can help sort of facilitate that. It looks like there's some other questions. Stuart asked, a friend of yours uses Finmark. I've never heard of Finmark. And I think it would be difficult to use a template without really going through and understanding the financials. But you know, software is amazing today, so maybe there's works. The big question I would have is if you're plugging things into a model that produces a magical result at the end, I would be nervous about presenting that to investors if you didn't understand how the model works. And so I think it's really important to really build your first, at least budget of where you're spending money, where you have spent money by yourself. And then, you know, once you have a clear understanding of how the business works, then go ahead and hand it off to someone like us to build your model. But you really need to be in the weeds of it, and you need to be responsible for that. Another question, if you have a physical product, oh no, that looked like an answer to the prior question. Are there other questions that people have?
Andrew, I've got another question. You were talking about taxes, like payroll taxes. I've heard that in Seattle, even the founders have to be paid minimum wage. And I'm a little confused about that because if, you know, you're trying to get off the ground and you got like, you know, zero or close to zero revenue, like how are you supposed to pay yourself and do all this?
Yeah, so that's a really difficult question. And I think from the most conservative view of the law, you're not allowed legally to work for free via the IRS or the state of Washington. And the state of Washington has an exorbitant minimum wage of, especially in Seattle, $15 an hour. Practically, many founders work for free and don't pay themselves. And so, and I've never seen a founder that worked for free get stung by the IRS or the state of Washington saying, hey, you had to have paid yourself minimum wage.
Sort of
Someone
a,
asked,
a follow-up question at Andrew is, I mean, if you're working like 100-hour weeks, do you have to record overtime?
feels like everything locked up for Andrew. Everybody else's hand is moving. Hi, Andrew. You back?
Hey,
there you are.
Sorry, I don't know what happened.
Welcome to Comcast.
Were
So
you
Alex
able to
asked the question.
Yeah, I didn't hear the question.
Just furthering that minimum wage question, like, would you have to claim overtime if you're working more than 40 hours a week?
Can I just throw something out there? I don't charge for most of the hours I work. I do charge a little bit, but not much. I don't charge for all the hours I work. I don't think you have to be honest about the hours that you put in, seriously.
Yeah, Brian has volunteered in the chat that if you own more than 15% of the business, you don't have to be paid. I haven't seen that law just practically. When we work with founders, so there was actually it was a guy that went through Seattle Angel Conference 2 years ago. They were totally bootstrapping the company, and in 2018, they'd only had $2,000 of total expense that they'd invested to sort of get their business off the ground, and they worked for free. So they really didn't have a justifiable business expense, and they had zero revenues. And when it came tax time in 2019, we had a really frank conversation about whether or not they would actually survive long enough to for us to finish the tax return and get that filed for them. And so we made the executive decision, and after talking with some tax preparers, that they will consider all of 2018 expenses as startup expenses and have their first tax return be their 2019 tax return as a first year return. And then they would call those their startup expenses. And so when the IRS came looking for their tax return for 2018, 19 would satisfy that by saying it was first year. And in turn, these guys ended up raising a couple $1 million seed. And so in 2019, we got them all caught up. And we went through that process and everything worked hunky-dory. But had they not gone and been successful going forward or not raised their round, it wouldn't have been worth it for them to pay $1,000 for a tax return. And that's the type of firm that we are. We try and be reasonable to what's appropriate for the founders, what's appropriate for, to comply with the laws, and where it's okay to sort of ride that area of along the line of the most conservative tax advice or the most conservative way of doing accounting and what makes sense for the business. But we don't mess around with like payroll tax and sales tax.
So any other questions from anyone around accounting issues and accounting processes? How come LLC income mix with income from being an employee? How does LLC income mix with income from being an employee?
I think, Harmon, the question that I'm reading from you is, if I have W-2 income from a company, what happens to my income from my LLC on my tax return at the end of the year?
Yes? Right. Yeah. So I was an employee for part of this year, and so I still have all that income, and I paid all those taxes because they took it out of my check. And then now I have this LLC, which may or may not make money, but
Right.
So how do those two mix, I guess?
Yeah. So I actually just answered this question for a gal right before this call when we set her up. She was a hairstylist, and she works as a W-2 hairstylist part-time, and she also does hairstyling on her own. And so in her part-time job, she pays taxes, sounds like similar to what your question is asking. And then when she's not working her full-time job, she gets paid directly from customers. And so what the problem that she was going to have, had she not talked with us before end of year, was that as a sole proprietor, she had the choice of taking itemized deductions or standard deductions. So if your side business has no business entity whatsoever, the deduction of those expenses is limited to whether or not they're over $12,000 as your standard deduction. And if you do take those, you don't get to take that extra $12,000 as standard deduction. When it becomes an LLC, what the LLC does is it creates a Schedule C or a K1 that drops onto your income statement. So what your income will look like is you will have income from W-2 work, you will have income or expense from other business, and you'll have to pay self-employment tax on that. And then you'll have your net income that you'll pay total tax on. So if you make money through the LLC, you'll get another line of income as if you got 1099 income outside or investment returns from dividends. If you have a loss from that business, you'll be able to reduce the taxable income you have and likely get a tax refund at the end of the year. If you're a C corporation, the C corporation will either provide you dividends or it will provide you income, but you will not take expenses from a C corporation. Any other further questions if I ran through that too quick?
I think that was a good layout. Yeah, thank you.
Awesome.
Bridget, do you have any questions?
I'm sorry I'm late to the party. I was on another call. So was there a presentation at the beginning?
There
Yeah,
was.
sure, quick one. Yeah.
And we will post it on our YouTube channel. So the Seattle Angel Conference YouTube channel is starting to get all of our workshops. Do you have an accounting question for Andrew?
I was just hoping to learn, but yeah, I just went through a lot of this prior year. What you were saying, we're an LLC, and yeah, the K1s and figuring all that out. I guess like something I wish I would have known, of course, before COVID and all these things. So we didn't show any income as owners for 2019 or 2018. So we couldn't benefit from any of the PPP loans and things like that. So the questions in the beginning about, should you pay yourself as an owner or founder? Do you need to? That was pretty helpful. So thank you.
Yeah, Tatiana, looks like you have a question versus S and C Corp.
Yeah, like in the beginning, I think, for the founders themselves, it's better to have S Corp, right? Because at least we can deduct those expenses and some of those expenses that we put in the startup. But I think when you go to raise money, it's better to be C Corp, right? Because that's what investors want, obviously. So, how would you handle that transition?
Yeah, so I wouldn't say that it's better or worse to be a particular type of entity, but I will talk about the reason why investors want a C corporation. There are a whole bunch of rules around the first money into a C corporation in qualified small business stock that give a tax advantage at sale for the first investors into a C corporation. The other thing about a C corporation is if the business has gains and losses, it does not affect the investors in a C corporation unless the business gives them cash. Whereas in an LLC or S corporation, if there is income at the end of the year, regardless of whether it's distributed to shareholders, that hits someone's tax return. So there's situations, particularly in an S corp or an LLC, where someone will receive income because the business was profitable, yet the income is not paid out to pay the taxes. It's left in the business to make other sorts of investments in assets or other things. And so I think that if you were self-funding your own business, it would be best for you, if you're not taking a salary out of it and it's not making money, to be an LLC or an S corp. I say that you should become an S corp when your business is pretty profitable, because there's additional expense in preparing the tax returns. You'll have to file a separate tax return for the S corp and your personal tax return. So the S corp files an 1120S and then provides you a K1 of the profits. And in that case, there's an additional regulatory burden to do that, but it will allow you to pay yourself a salary and withhold payroll taxes as long as you're paying yourself a fair salary. So we work with a lot of high net worth individuals that have S corps for their business entity because they want to pay themselves a consistent salary and save money on their additional profits for owning the business. And so some argument could be made for, if you're planning on having a venture scale business, to not change entities throughout the business, to just start as a C corporation. So the corporate structure and the books and all the historical information is super clean when investors come to the table. The alternative that I've seen being successful is that a founder will create an LLC initially, that when they start to hit the traction milestones, they'll convert that LLC and all of their equity as the contributed equity to their C corporation. So in not very many cases do I see founders going LLC to S corp to C corp, because you'd have to be really profitable to really justify that S corp. And so I would typically see LLC to C corp or just C corp from day one.
Andrew, you'd mentioned the first money in gets a, I believe, like a tax advantage. Would that be just the first safe in, or I
No,
forget a small safe?
The rule he's talking about is the qualified small business rule 1202, which if you do an angel investment into a company that's a C corp, and it must be a C corp, and you receive stock, then if you hold that for 5 years, then the tax rate on whatever capital gains you get is 0. And that's one of the reasons why angel investors ought to be paying more attention to the use of convertible notes, because you do the convertible note and it doesn't start the clock on this particular thing until it turns into stock. And so where the companies tend to do convertible notes stacked on top of convertible note, they basically are forcing the investors into a taxable position on their capital gains if they succeed. So the default simple thing is for people to buy shares as soon as they can for the successful company to get it to go. So the default answer is be a C corp from the beginning, sell the shares from the beginning, and do your price negotiation well at the beginning. From an angel point of view, that makes it the simple answer.
And that's good to know that 5-year clock doesn't start running until the convertible note converts to equity. Thanks.
There's a question via private chat about the most frustrating thing that a seed VC investor would run into when making a new investment. I think that when I was working with investors, I think that the biggest frustration was when an investor asked a financial question that the entrepreneurs had no idea and passed it off to someone else like it wasn't their responsibility. I think that would be very frustrating. I also think as we have companies that have raised venture funding or angel funding and have grown or not grown, I think another extremely frustrating thing for investors is when founders are not hitting milestones, but the company's still surviving and they have this investment that's tied up that they can't deduct from their taxes as a loss, but isn't going anywhere. So it just delays and delays and delays.
Andrew, different question. What's some of the what are some of the considerations of international revenue?
Yeah, so can you give me a specific example? Because there's many different considerations that we could talk about.
Well, you know, our biggest customer is in India, and we'd like them to start paying us. And one of the things I have anxiety about is like, shit, how do I like transfer the money, and what do I do about taxes? And oh my God, I mean, there's a whole bunch of things that I don't even know what to worry about.
Yeah, so I think I have a client that sells to clients, mostly banks in Japan, Australia, Europe, England, which is not Europe anymore, and the biggest the most cool thing is when trading with Europe, we got a currency benefit from the prices that we were charging, but most of these large companies are able to transfer in, and your bank will deal with the currency exchange. I have another client that does a lot of work with China, and one of their challenges is that when they go to the bank to take funds out or put them into their investment account or pay people, the bank puts a lot of scrutiny over them making those payments. So I think that as a small company, take money where you can get it as long as it's not illegal. But if you got larger, there's many businesses like on the large scale that have corporate entities in other places that hold their IP. And so I think that your specific question should probably be dealt with by a tax lawyer about your specific scenario. But I think that if you're a small business that has an international customer, that you're providing the services from America and everything's being done in America, you'll have to pay the normal tax you would as if they were here or there. And just make sure that you collect that money and you're allowed to collect it based on all the constantly changing treaties and stuff like that. I don't think India will be a problem.
Yeah, and I know you're not a tax accountant per se, but like, is it likely that we're going to end up having to pay taxes in India?
I think that you would have to contact the Indian tax authorities to determine that. I think right now I wouldn't worry about it if all of your operations are in America and you're not going over to India, and they're paying for your product here in America.
Okay, thanks.
So you might want to ask that question in the context of California. If you sold that product to someone in California, do you have to pay California taxes?
Do whatever you can not to have nexus in California. So I think we can talk about Amazon here because they clearly sell things all over the world. And there was a recent lawsuit, it might be a year or two old now, with Wayfair that was shipping all over the country. There have been new changes for physical products that necessitate withholding and paying sales tax in anywhere that you're selling products. Amazon for a very long time would not let their employees' laptops even turn on in the state of Illinois because they were in a dispute with Illinois of whether they had to withhold and pay sales tax in that state for their customers. And so I think if you're selling a physical product, do implement a tax software that automates that process as sales are being charged. So like Avalara or all of the Squarespace and all of those type of websites all have a tax plugin that allows you to automate that. So I'm all about automatic compliance and complying like during the, during the time that you're making the transactions, opposed to having to wait till the end of the year.
Hey, Andrew, I have a sort of specific question to Cascadia Carbon. We're a U.S. Canadian company, and we're raising around here by the end of the year. How much more should we allocate to accounting and tax preparation?
How much money?
Yeah, how much more?
So I guess if you were to hire us to do your bookkeeping, depending on the size and scale and how much funding you have, you would pay a monthly fee of between $250 and probably $1,500 at the super high end to do a monthly accounting that includes bill pay and all the compliance stuff that you need to do. If you haven't done accounting yet at all, we would probably charge some fee, as any accountant would charge, based on the hours it would take us to clean up all your past due accounting. We've negotiated prices with a lot of the large accounting firms to get preferred pricing for our clients. And a lot of times, if you have a budget in mind for a tax return, as long as it's reasonable in the first year, we can sort of bend the accounting firms in the joy of getting a brand new tech client to meet some of the expectations that you'd have. So I think in your case, I would be targeting between $1,000 and $2,000 for a federal tax return, depending on whether your books are clean or not. And that I would say you would do, in March. And I would try and do it earlier because it would be easier to get someone to give you attention as a small company before tax pressure deadline dates. And then,
Cool.
yeah, reach out and I'm happy to help you.
Awesome.
I mean, even if you
What
don't sign
about
up as a
what about
customer,
the Canadian
I'm happy.
side?
Yeah, on the Canadian side, I'd say you should definitely reach out to a Canadian accountant. So we have probably a dozen clients that have an international subsidiary. Some in India. We had one that had a crazy structure between Israel, Malta, and British Isles. And so in all those cases, we worked with their teams overseas to make sure that everything that we were doing matched what they were doing in their specific laws. Because as smart as I am, I'm not smart enough to know the laws of all countries all over the world. So.
Totally, and yeah, I know that Canada and the US have a pretty extensive tax treaties, which eliminates double taxation and all that. But I was just wondering if it would cost more for, like, if we should plan to budget in more for both. Like, in addition to the US taxes, Canadian taxes, should we also include more money somehow because we're doing both of them, or is it just?
Yeah,
does
I
that
think
make
you'll have
sense?
to duplicate your efforts for each entity. Each entity will have a tax liability and a tax cost to prepare those taxes in both Canada and USA. So if I was going to budget $2,000 for US taxes, I'd probably budget $2,000 for Canadian taxes as well.
Cool. Thanks.
So Carlos asks a question about his stable coin. They're using remittance and sending money to the Philippines that they convert into Philippine stuff. And he wonders what taxes does he need to worry about?
Thanks. Yeah, I think any time that there's money transfer things going on or banking things going on, I think that you really need to have adequate counsel from a large firm that can help you navigate those things. And I think that Zoom is not the best place to be addressing specific questions, especially when it goes through, cryptocurrency, because there's a whole nother series of tax laws around crypto and the treatment of that. One of our clients was and continues to be on an ad hoc basis, Zen Ledger. Zen Ledger created a software that you could sync with your cryptocurrency accounts to automate taxes. And so I know enough to know that you really need to have a lawyer to help you navigate that.
And so one of the problems. Go ahead.
Yeah, we're working with Prime Trust, so we don't have the license really to do this. but by basically being in Prime Trust's skirt, so to speak, we're able to do it. And yeah, but I think you're right. There are certain tax implications that we need to worry about and that we need to know about that we really have no idea right now.
Yeah, I would try and find a seminar like mine, like the one that we're doing right now, presented by a lawyer that specializes in Bitcoin. There's a whole bunch of meetup groups around Bitcoin. And we also have Pythia, which is a Bitcoin VC. So my guess is that they're probably doing some things to attract more interest in their fund. So I would look there. I also think that it wouldn't hurt you to try and network with some of the large law firms like Perkins Coie, Wilson Sonsini, Fenwick, DLA.
We're working with Gravis Law right now.
Awesome. Yeah, and I would reach out to your lawyer and get a specialist recommendation for them. I know, yeah, all the large law firms have people that that specialize in this.
Okay, thank you.
So Bridget asks about cash accounting versus accrual accounting, and how does that work, and what do the investors want to see?
Yeah, so eventually when the business grows, they will have to be on accrual accounting. And the difference between, the primary difference between cash accounting and accrual accounting is when your revenue is recognized and when your expenses are allocated as owed. And so we help our clients sort of do accrual light with all the bookkeeping that we do. I think that accrual, just in my opinion, I think that cash is definitely easier. And if you are paying taxes, you're going to be paying taxes on actual money you got and actual money that you spent. But I think that accrual gives you the more flexibility to really control your situation based on the intentions of the business. And so most of our clients that do a lot of sales will do on accrual accounting so that we can sort of adjust things over bridge periods, end of quarters, end of years, end of periods.
Got it. Thank you.
Are there any other questions that people have? So from a Seattle Angel Conference point of view, one of the things that's going to happen when companies get into the due diligence phase is that we're going to ask for the financials. And when we say we want the financials, we want the past financials about how have you spent your money. And the reason that we want to see that is because we want to make some kind of gut check on your financial discipline. We want financial discipline in the company so that we know that going forward, there's going to be financial discipline. It's very hard when there's no financial discipline and then you get $1 million that actually turns into $1 million with financial discipline. And so the second thing is that we would like to know where you're at, like how much money did you loan the company? How many people have little fingers tied into your finances so that we try to see if there's a rat's nest in there or not. And then the projection about where you're going, whatever the roadmap you think you're going to do. So how many of you can tell me 5 years from now, what size of business you're trying to get? Raise your hand if you can tell me how big your business is going to be in 5 years. Yeah. So Stuart, how big is it 5 years from now?
Do you want revenue or do you want, what do you want?
Revenue. Yeah, gross revenue.
I raised my hand saying that, yes, I know that, but I have to think about it for a minute.
So Brian, you want to fill in the blank there? How big do you want to be in 5 years in gross revenue?
Sure. So if we get 13 customers, we can get to 30 million in revenue. If we get a few more than that, 100, maybe 200 is possible, somewhere in that range.
Yeah, see, there's that squishiness in there that I'm all anxious about. I want you to tell me, by God, we're going to get 15 and we're going to be 20 million. and or whatever the thing is, and we have a plan to get there. And if we do better, hallelujah. But we know where we're targeting, right? And I understand that 30 million is also 25 million, and is also 35 million is still 30 million, right? We're just trying to get close to that number, really order of magnitude. Am I $100 million business, or a $10 million business, or $1 billion business? And it's the same amount of work. It will take you just as much work to get the one as the other. It's just different work, right? Because you're going to work 120% no matter what to get to a $10 million business. It's none of these are easy, but you have to set your processes in place to make the $10 million actually be a $100 million business. And if you don't put the processes in place, you're in trouble, right? Won't get you there.
Mm-hmm.
So Stuart, did you get your
That's
number?
one of the challenges I've run into with this is that I've got pretty good visibility into our ability to get, say, a small number of customers. I also know what the total market is. I know roughly what our competition is. And so I can make some estimates based on that. It's just my confidence in that number is not very high. That being said, it seems like all businesses need to make that assumption. So
what I just heard you tell me is that you don't have faith in your sales process.
yes, or at least
And
it's
so
long
when you get
enough that
yeah, so when you get a salesperson that predictably can close people, then that'll all hone in, and your cone of uncertainty will narrow down, right? And so getting to the point where you're doing predictable sales is really a vital changing point. It will fundamentally change how you feel about that number, but still, order of magnitude, you're aiming at the $100 million business, right? You're not aiming at the $10 million business. And so you're going to have to do the salesperson choice to make that happen, that kind of thing. Stuart, what was your number?
$15 million revenue per year in 5 years. And that's based on very shaky projections. Our current business, the SaaS business, I would be hesitant to project that one because it's been growing pretty slowly, and we wanted to see what the uptake was going to be before making projections 5 years out. I mean, you could ask me what I want, but having actual data behind it makes it more credible, right?
So when Andrew was talking about how to do that, he started with a set of assumptions.
Yeah.
And let me suggest this as a methodology. Please do the spreadsheet on that and do the projection. It'll take you about 4 hours. And on the sub sheet that you're doing the assumptions, color the background orange if this is a number that's a best guess. Color it yellow if this is something that you got by doing Googling and doing research, and color it green if you measured the data from an experiment. And then you've got this weird ass, wild ass, large uncertainty on your projection, and then you tighten that up, and the closer you get to green on your assumptions, the tighter your thing will be on your projections. And so every week you just try to turn some of those things from orange to green, right? And preferably more than 5 a week you turn to green, because you ran an experiment and you said, I talked to that guy and he paid me $10,000, and now I know that that's a possibility, right? And so having it perfect is never the answer for a projection. It's the process of thinking about it and the tuning every week that's really the important part. And that's where the financial discipline comes in, right? I look at what I've done, I look at where I'm at, I look at where I can go. I build the rolling 13-week cash flow projection of how my near-term money is going to be spent, so that I always stay cash flow positive and I don't run myself into a hole in the ground. And then I have this long-term cash flow projection for 5 years of how I'm going to get to 15 million. And I have history back. I can go measure and say, on average, it's costing me this much to get a customer, and it's costing this much for rent, and right. And that exercise will be very meaningful for you if you do it in detail rather than in the MBA abstract numbers of, oh, sales is going to be so much of a percentage of gross revenue, right? Do it specifically. What salesperson costs, what bonus are you giving them? put that in the assumptions. Other people got projections on where they're going to be in 5 years. Yeah, David. How much? How big you going to be?
I expect to be over 100 million within 3 years. And yeah, I could
So
be.
if you're a 10x company growing at 10x a year, how much do you have to grow this year to be over 100 million in 3 years?
I don't think I need to. I should be over 100 million.
Well, so here's the thing, right? I have a long-term goal and I need some intermediary goals. So if I'm going to be 100 million in 3 years, then in 2 years, I'm going to be 10 million. In 1 year, I'm going to be 1 million, right?
Yep.
If I'm growing at 10x, right?
I'm actually
that next week, I need to be growing at 10%, right? And if I'm not growing at 10% next week, then I will never make it to the 100 million.
Yeah, I've doubled in my first year. I'm in my third year now. I doubled the first year, and I've tripled last year. So it's not
the classic Series A venture capitalist uses the metric of triple, triple, double, double, double. So in 5 years, triple, triple, double, 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 right? And so if they can't see that, then they're not going to be a venture investor, right? That's the DFJ model of the world. So doing those broad, gross assumptions about how fast I have to grow this week so that I hit the 100 million or the 10 million or the 1 million at the point where I want to do it, you know, the steering of the road today tells me what road I'm going to be on tomorrow. And when I keep doing the, 2% growth per month, I'm not getting to the $100 million in 3 years because it's just not going to get me there. Right? So it creates urgency to achieve the goal.
Yeah.
Anyone else want to put a number out there? So I would encourage you to do your financial projections and work through that, and then go talk to Andrew or someone like Andrew about how those assumptions play out, and then how you bake those into a QuickBooks so that you're building a weekly engagement with your bookkeeper and proving that you're on track with what you're doing. And if you build that financial discipline, it will dramatically change your experience when you reach out for outside money. Any other thoughts about accounting that people want to put on the table?
Yeah, I had one that's kind of tangentially related. It relates to tracking time. So I guess, time is money. And maybe you guys have some thoughts on this, either John or Andrew or others. But basically, as a solo founder, or when you're kind of being a founder, but you're not paying yourself, is it still useful to track your hours? So have you guys ever dealt with someone that's been like, hey, I deserve this because I've already put this many hours in, or something like that? Is that ever useful to
So I heard you ask two questions. I heard you ask, is it worthwhile to track your hours? Absolutely, it's worthwhile to track your hours because you get lost in a lot of details. And if you don't know what you're spending your time on, you might be wasting a lot of time not being productive. And so I would try to keep things focused on projects and being productive and understanding what your billing rate percentage is and how that's working for you. Just as a consultant discipline, I think that's important. But now you're starting a startup and you have some founders, and the founders are contributing. The first thing that I expect for the founders to do is to contribute money, that there's cash that goes into the business. Second thing that I expect them to do is to not take money out of the business until they take it out of revenue. So the money you contributed is not money that goes back to you, it's money that comes out later. I do not have a problem with building a debt, essentially, based on how many hours you work. The whole slicing the pie, working accounts where you keep track of where people are doing their thing. But I would turn that into equity. I would not turn that into cash, nor would I turn it into debt, right? So if I'm going to spend a bunch of time, that's fine to account it, engage with it. But really what you want to do in my weird world in my head is run an LLC, let that LLC be my experiment business where I'm going to run my lean startup experiments and I'm going to process money. And then, oh shit, we found something and it works. And now we're willing to commit to this thing because it works, because we're like pretty close to product market fit. Then we're going to put cash into that business. We're going to put owner equity into that business, and we're going to form a new entity where we trim off all of the people that were non-contributors and we focus on the group of people that will achieve product market fit and go fast, right? Because once you hit product market fit, you need to go fast. So you can use an LLC and then the conversion from the LLC to the C Corp as a mechanism of driving things forward. And then the question that you will have to answer is when 10 people are in the LLC and only 3 of them go into the C Corp, what happens to the 7 that don't come along, right? And I would argue that some percentage of what goes into the C Corp is from the LLC and some percentage is from the individual contributors that are going into that, right? And that's equity based on the amount of time they spent on it and equity based on the money they put into it and the risk factor that you're counting in your founder shares. Andrew, did I say anything stupid?
That sounded good to me. I
All
like
right.
LLC on the side because then you can take advantage of those tax deductions while you're doing your day job. And the only other thing that I'd throw in is investors really don't value as much the time you put in because they're expecting the entrepreneurs to be spending every waking moment and every sleeping moment focusing on making their company successful. And so I think that the in my opinion, the hours are all hours, so it wouldn't really matter to track them.
But for the efficiency of the programmer, they need to be managing their capacity. And
Sure.
Being distracted is one of the evils of startups that never gets talked about enough. So next week, we're going to talk about B2B, B2E, and B2C2B sales processes. So when Stuart is selling to a B2B sale, what does that look like? When Brian is trying to close an enterprise, that this stupid utility that takes 3.5 years to do a budget, how does that work, right? And then when Ben decides to do a direct sale to individuals that eventually cause him to be then selling to channel partners that are enterprises, what would that look like? So we have a speaker talking about that next week. And so if you go to the meetup.com Seattle-conference, Seattle-angel, you can see those. I think they'll be useful for you. We're planning on doing workshops all the way through into March. And so if there are topics, places where you would like to dive deeper, please send me a note so that we can arrange those workshops. Any last words?
Thank you.
Yeah, just thank you. Thank you very much for both of you.
Yeah, thank you so very much, Andrew. I really appreciate you doing the workshop. And maybe we need to put together a workshop on, tactically, how do you build a simple, stupid cash flow projection, both the 13-week cash flow projection and then the 5-year cash flow projection.
I will sign up for that immediately.
Yeah, that would benefit me also. Thank you. Thank you, John. Thank you, Andrew.
Yep, you're welcome. I'll talk to Andrew and see what he's willing to do. Thanks. Bye-bye, guys.
That's good.